Thanks, everybody. My name is Scott Harkey. Again, this is the Commerce Goes Digital panel. Introduce my panelists real quick. We have Frank Young from Global Payments. We have, look, did it get switched out? It did, luckily. There we go. Modern Technology. We have Brad Powers from Passport pitching in last minute. So, go easy on him if he doesn't seem as well prepared as the others, although I'm sure he will be. And then we have Tim here from Clusive as well, which is a local Charlotte startup that you may have seen at some of your favorite local coffee shops. If you've ever seen the mobile ordering at Not Just Coffee or some of the other local shops, that's Tim's company, Clusive. So thank you guys for joining me today. Quite a distinguished set of panelists here, so it should be an exciting conversation. The whole theme of this panel is around the transition of commerce or certain types of commerce to digital, right? So as we think about how everything from how you order your food to how you pay for parking to many of your day-to-day interactions and how they're shifting to digital, whether it be mobile, online, whatever, the sort of impact of that on what we do, right? And so I thought a good place to start would just, you're all coming from very different businesses in the context of the products you provide, to get your perspective on what is the impact? What do you see as the biggest impact of that shift to digital, either in the context of opportunity or in just its impact on us as consumers? Frank, maybe we'll start down with you.
Yeah, so by way of background, Global Payments is headquartered in Atlanta, 10,000 employees around the world. One of our growth businesses is based right here in Charlotte. We've got about 300 technical engineers in a Ballantine office that deliver software for the restaurant and hospitality space. And they really do represent what we're going through as a traditional processor acquirer. As an aside, big news in the acquiring space today. Adyen went public and somehow a tenth of our revenue, but they matched our market cap. So they're doing something right. A great competitor. But what we're focusing on is we're very much a traditional big iron data processing, transaction processing company. And we identified about 3 years ago that everything was moving to software. We've all heard software is eating the world. I think it's true. Platforms are eating the world. I joined Global Payments from Google because of that story. They were telling a story about how they needed to shift their business model. So today, 40% of our revenue is not transaction-based, it's software-based. And much of that software we're now actually building natively in the cloud. And it's all about the things that I think all of us on the panel here will talk about in terms of customer experience, cloud-first development, creating meaningful interactions between consumers and the merchants and the brands that they love. It's really fundamentally changing our business model. And so we no longer want to be compared to First Data, Vantiv, and TSYS. We want to be considered peers to Intuit and Microsoft and Oracle and other software companies. And I think every one of my competitors need to be thinking in those terms in this new digital world.
And Brad, I mean, your whole business is taking advantage of this shift to digital. So maybe give a little bit of your perspective.
Yeah, so I think maybe 6 years ago, that's when digital payments for us started pushing around. Hey, no one's going to pay at a physical meter or ride a bus and use cash or ride a train and do the same. So for us, the shift happened a long time ago. And we took advantage of the offerings that were out there. Now we're processing about 300,000 mobile transactions a day. And for us, it's now, I think some of the other guys earlier today were talking about the customer experience. And so I think we're, from a mobile perspective, that's great. We're trying to take it a step further and go more to the API perspective so we can facilitate payments for these bus, tolling, transit, parking, et cetera, from multiple facilitators, whether it be anyone who wants to develop an app and has a better customer acquisition strategy or can make the customer have an easier time making that payment, remove the friction. So we're definitely taking advantage of it.
And Tim, same sort of thing, right? Your business is based off of trying to replicate something in some ways that exists in the physical world and bringing it into a digital product. Mm-hmm. What is your perspective on some of the key pieces of that or advantages to that?
Yeah, I think that as we saw the growth of Amazon and really change the landscape of retail in general and the act of transacting, we saw brands across the gamut really start to build their digital experience and augment their in-store experience. And what the effort was really around was creating that frictionless ease of use, right, and the ability to transact regardless of the channel and the emergence of omni-channel. But I think that we're at this point, this juncture, where it has somewhat become a saturated market, right? And that there are so many options available that it's not easy. And what makes Amazon easy in that experience is that it's a click of a button, regardless of what you're buying. Right? It's the same checkout experience. So as we evolve, and I think Passport's another great example of that, right? It's consistent, and you know how to interact with it because you interact with it regardless of the transaction. So it needs to be comfortable and intuitive, and that way it's not just millennials adopting it, it's everyone who has access to a smartphone.
So I guess one of the questions I'd have, and Frank, especially to you, is the thing you talked about was sort of making this transition to a software company. You know, there's a lot of talk and events like this in general about the fintechs and the role they play in the ecosystem, and then the more traditional players, whether it's a bank or whatever it may be, right? And that a lot of times the fintechs are sort of seen to bring new experiences that the incumbent couldn't create, right? Whether it's through ease of use or it's because they have less regulation or whatever the reason is. What is your perspective on why the incumbents aren't able to build those things? Is it cultural? Is it organizational? I'd say it's obviously not technology. Everybody has access to the same technology in theory. So as one of the entities trying to go through that transformation or going through it, what have been the biggest sort of barriers or at least hurdles to really making that transformation?
Yeah, so I repeat something somebody else said. Jim, who was up here earlier, may know who can stake claim to this, but I'm very fond of saying incumbents need innovation the way innovators need distribution. The incumbents typically have distribution, right? You think of a traditional retail bank. They've got all the distribution that they want, both physical and online. For an innovator, you've got to figure out how to take advantage of that. Oftentimes, we work with innovators who they can't figure out the distribution model. They're great technologists. They build great experiences. But in some merchant segments, you literally have to be fighting it door handle to door handle, trying to convince them to switch to the service you've got. And so what we found was distribution was our strength. And so it's very difficult for us to build innovation. So we often look to partner commercially. We consider ourselves fairly acquisitive. We've made several software acquisitions.
But like, why is it hard for you to do that?
I think it is cultural. When you think about the technologists in an incumbent organization, and Scott, I know in your days back in Bank of America, you may have felt some of this. That the folks who've been in those roles for so many years, in some cases decades, it's all about predictability, reliability, resilience. It's not about launch and iterate. In fact, launch and iterate is almost at odds with that mentality. Bankers, financial incumbents, you've got to get it right down to the penny. Coming from Google and some of the Silicon Valley guys, I remember the first time I used Apple Maps. I'm pretty sure I came pretty close to driving into the ocean because, they launched a product that was fundamentally flawed. I think financial incumbents are very reluctant to go down that path. So I'd hang it all on cultural. I think that's the
And how do you guys take advantage of that, right? And it maybe not as deliberately as, hey, we're building a product, but whether it's through the speed you move or the products you sort of pursue or the way you position yourselves in the market, how do you guys take advantage of that aspect to move faster, build with less constraint, if you will?
Yeah, sure. So I'm going to take that incumbents thing because, that's exactly what we've been up against is meter companies that were building hardware out on the streets, right? So that was the first thing we were up against. Those guys are used to installing servers in a garage and programming in C, where, we're at AWS and we can move so much faster than they're able to. And their first thought is, how we need a socket connection from one thing to another. And it's just a different mindset, and the culture and everything just makes it's so different. And I experienced that before too, where I was at Blockbuster working on a project to rip Netflix and build a Netflix competitor. Blockbuster, it was the exact same thing. It's just slow moving.
And how'd that go?
And it did not. We built a system, and then it didn't matter. It was just too late, right? So, very similar.
Yeah, and we benefit from that dynamic quite a bit in that, I'll use the example that Square has tried to build the, in essence, Clusive 2 times and failed, and that's because their market's capped. They will never be able to partner with their competitor point-of-sale companies. So what we're able to do is move in as a third party and partner with all of them and broker that relationship. That's mutually beneficial regardless of who we're working with. But that's really been a critical point, at least in our short-term growth, to ultimately create new sales channels. Frank, you mentioned distribution. That's critical for us, is arming ourselves with those channels with folks who have been there and done that and help facilitate those relationships as we grow while they can't build the technology, right? It's not that they can't build it. It's
Right.
hard.
It's cultural, to Frank's point, right? So what's the end game, if you will, to that story, though, right? Does that role always exist in the market, or is this a sort of space and time where there's such transformation happening, the pace of the incumbents to keep up with that is just not enough compared to where they need to be from a business standpoint? So it's created a room, if you will, for this sort of wave of new companies to come in and solve that. Is that a point in time thing, or is that always the way it will be, in that their need will exist for third-party, smaller companies to come in, be faster, quicker, better, and then assimilate into the incumbent over time? Frank?
Yeah, I've got a general view that I think value is ultimately gonna migrate to what I call integration. I mentioned the concept of platforms before. I think what you've got are, traditionally you may have done a lot of your business with one primary brand in a certain area, let's say payments. But over time, everybody's heard about the fragmentation of the services, right? The value chain is being picked apart. And as that explodes, what happens is you then have the emergence of these platforms that integrate all these various services. And when I'm talking platforms, I'm talking Android, I'm talking iOS, I'm talking Amazon, Alibaba. There's different flavors of platforms. The thing that keeps me up at night is the role of those platforms, and there's lots of different flavors of them. And knowing, I doubt we'll ever be a platform, but we'll clearly be a supplier into, an enabler of, or a participant in many platforms, and trying to figure out how to play in that world. I do think you got to be really smart about how you pick and choose. Even if you're developing a mobile app, do you do it for both Android and iOS? Do you start with iOS? Do you take advantage of the native capabilities, or do you do something different? I think that question of platforms is a part of the answer to your question, and that's one that I think will continue to drive for many, many decades.
Yes, so let's talk about that for a minute. I've long held the view that at the end of the day, the platforms are in the best position to own payment, right? When you think about all the roles in the context of a payment, the thing I'm interacting with is always going to be able to, in theory, build the better experience to do that than any third party that attaches to that, whether that's a bank or a card brand or whatever. If I'm Apple, I should be able to build the ultimate payment experience on an Apple device because I own the software on the device and the hardware in that context. Right or wrong, how do you guys view that the market, and this is a commerce panel, so to sort of pull it back towards the transaction side, when you're thinking of who is the ideal partner, or who is the party we should be aligning with in the context of payment? Is it the platform? Is it figuring out the Google APIs to use to build out that experience? Is it, let me find the banks to work with and leverage it that way? Is it the merchants? Let me sort of build around that experience. You each target different parts of the market, so there's some variety there. But in general, what's your personal view around who's the player sort of in the lead, or the one that best benefits your sort of chance of success, I guess? And Tim, start with you.
That's an interesting one. Considering that we almost aggregate all of those solutions into our product, right, with a wrapper of Clusive around it and brand it in our own fashion. But it's working with those local community merchants who are ultimately dictating what features and functions are present. So going back to the iterative speed, right, and the ability to build a product quickly that will be adopted, I think startups that are in an advantage there because we actually interact directly with the folks that we're serving in most cases. But to answer the broader question, I mean, we leverage Apple Pay, but we're about to launch our Droid version. Back to your statement on we decided to go iOS first, and
Yeah, so maybe we'll dig a little bit on that. Why iOS first?
That was just a study of the Charlotte market, understanding that despite globally there are far more Droid devices than iOS devices, in Charlotte there are more iOS. So we went that route, and we hit a threshold of consumers requesting Droid. So we didn't necessarily pivot. We just built out the product on that platform.
Okay.
Yeah, for us, the most important thing is the contract with the government to be the exclusive provider of inventory for parking or for tolling or for transit, right? You have to be able to sell the potential thing they have, and the payment options are half the time the platform and thing is dictated by them, right? It's a government regulation. You have to be fair to everyone. So we can't do an Android device and not an iOS because they say it has to be available for everyone. We have to have an IVR payment option. We have to have an SMS payment option because some people don't have smartphones. We tried to put a stick in the ground on saying we're not going to build a Windows app, but those are things they're trying to force. And so for us, try to get with the biggest platforms because those have the most users, and that's what we kind of care about.
Yeah, and I guess if we push beyond the sort of who is your customer, right? Because clearly that's the focus, is your customer is the municipality or the government or whatever. And think about ways to, say, increase distribution, right? So I think in your case, if Google comes to the table and says, hey, we want to build this cool new transit product, we want to integrate parking as a piece of that. So not only can you search for your location, but we can show you where the parking is, and they can pay if we're hooked into the APIs. Versus, a bank coming and saying like, hey, we want to do something with, how the transaction history sort of flows through and providing a real-time notification of parking, blah, 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 whatever the thing is, right? Is there any sort of segment of the market that you feel like has a more potential or alignment with what you guys do, or is it really
I think probably the auto manufacturers, the OEMs, right? So, if we're talking about, we're moving towards that API model, and we think that that most of the transactions will be facilitated by the vehicle itself, whether it's autonomous or not. But it seems to be an extra step to use your phone when your vehicle knows where it is and where it's parking and how long it's going to be there. So for us, I think it might be kind of the OEMs might be the most, the car manufacturers are going to be the most important to us in the next few years.
Okay.
Although that takes the timeline to integrate with an OEM and get something in Dash is like 3 or 4 years. So it might be a while, but in the short term.
You see that as an opportunity.
Yeah, we see that as the opportunity for sure.
Yeah, the connected car experience, what we look at, where we keep a really close look on the market, trying to figure out how are these solutions like the one you're working on going to innovate to a point where who is the connected car platform that's going to emerge? It's probably not going to be one or two. I think, Ford and GM and the Japanese manufacturers are all going to take a run at it. Tesla, what are they going to do in terms of opening up a platform to facilitate new experiences? That's a really, really exciting. And I think, use cases as focused as parking are really fascinating to us because they match the perfect definition of a disruptive opportunity, right? You serve a segment of the market, to your point, that most people would look at as kind of, tough to serve. It's complex, costly. Old iron has to be installed. But if you can deliver kind of a really focused solution and then expand your service over time, those kinds of platform opportunities, there's platforms that are going to emerge in the future we don't even know about yet. But I think the car is one of them that's going to pop up in terms of a really interesting competitive space.
Yeah, it's great when Frank can pitch my business better than I can.
So Frank, no spoken opinion on alignment of platforms versus financial institutions, card brands, et cetera?
So the one platform that I have a little bit of a love-hate relationship, our livelihood at Global Payments is dependent on them. I consider Visa a platform. They're very, they've got some work to do from a speed of innovation perspective and what they're bringing to market and what role they're playing relative to us. But I'll put MasterCard in that same category. The payment networks as a platform, I think, are ones that we all have to contend with. You may not even, if you're in payments, you've got to figure out how do I play with their rule set and how do I bend my model. One of the topics, Scott, I hope we touch on here is where the whole world of tokenization is going, because I really did think that the world was moving toward payments in the OS until Visa and MasterCard announced the emergence of their buy button, which seems to be kind of dragging it back to the network level. And there's this kind of tug and pull between, is the OS the platform or is the payment network the platform? It's a pitched battle that doesn't have a clear winner in sight, but it's really interesting to kind of be in the middle of it.
Yeah, so let's talk about that a little bit. So to give context, I don't know who all has seen this, but there's been a lot of articles in the last couple of months about the card brands working together under the concept of this joint buy button, right, depending on what article you read. What they absolutely announced was the introduction of something called Secure Remote Commerce, which is a standardized way of the browser interacting with a payment credential for an e-commerce payment. What they pseudo alluded to and what's been picked up by the press is the concept of this joint buy button, right? So you go to a checkout page today, you see PayPal, you maybe see Visa checkout, maybe MasterPass, the concept of joining at least the card brands under a single button. I'll save you from my personal opinion as to how real that is and how much that's just noise. But the general idea that Frank is sort of alluding to is that one of the underlying premises of digital commerce has been, from the card brands, has been this concept of tokenization. What they've done is put standards around that in such a way that they ultimately control the access of those tokens to be used. And that presumably could lead to rates and liability and other things that could exist, right? So what has been evolving is this concept of what happens in e-commerce, how do we standardize the transaction or the checkout? There's an effort from the W3C, which is the Internet Consortium Group, to create a payment request API, which standardizes that across e-commerce. But then the networks came out with this sort of buy button concept. We originally were going to have a panelist from Etsy, which has some very distinct perspective on that. As a large global merchant, has some really interesting perspective around that button. But the short version of it is there's been a lot of merchant backlash against it. There's been a number of merchant advisory groups that have spoken up and said, this is not in our best interest necessarily. We want to talk more about this. So Frank, all that queue up just to say, let's hear what you wanted to say or you know, what your perspective is. I'll ask you guys as well, but I don't know how familiar you are with it, you all are. But is the networks putting a definition around what an e-commerce transaction should look like a good thing because it standardizes it and in theory secures it? Is it bad because it blocks out others? You know, it sort of reduces the ability to get into that flow or to play a role?
Yeah, I mean, from a very high level, I think we're purely in alignment with their objectives, which is remove friction from the checkout experience, secure the transaction, and make it ubiquitous. And they're in a great position to enable that. Just as kind of an industry observer, it was really interesting to watch kind of where the world was going. And I thought I had seen this coming 5 to 10 years before it did, which was there were really only two buy buttons that mattered. There was Apple Pay on iOS, and there was Android Pay, now Google Pay on Android. And I thought that's where the world was going, and they would ultimately be the vaults of choice by consumers. You would give your card from your pocket to Apple, and anytime you're shopping on iOS, they would present it to you so you could use it in a very kind of click, done manner. And I sensed that Visa, MasterCard saw the world kind of getting away from them. And then you add on top other platforms like Alibaba trying to kind of work entirely around not only the issuers, but Visa, MasterCard as well. And it's a really interesting kind of dynamic. We had actually leaned into Google Pay, which was a collaboration between us and Google and every other one of our competitors to kind of put the focus on the merchant and the merchant service provider, which would be Global Payments. With SRC, it's now kind of been removed one level, and I think this is the source of the backlash we hear from merchants, which is, you know, I'm collecting tokens from my customers shopping on my website. In order for this SRC to work, I've got to take those tokens and just give them to Visa and MasterCard to manage on my behalf. I think that's the essence of where the problem and the friction is. But listen, these things are going to take years to figure out. I think the really interesting thing is, you know, from an innovator's perspective, you know, do you see the value of this frictionless commerce where you don't have to fill out 3 pages of information, shipping, billing, my phone number, and it's literally click, done to execute a payment. I can't argue with that as being a magical experience. It really is, but
Yeah, I was going to say, maybe
people
from you
innovating
guys'
will drive
perspective,
it.
as you think about how you're building these checkout experiences in mobile, what have you seen, or how do you feel about the inclusion of those buy buttons, whether it's the native ones like the Apple Pay or it's the PayPal or Visa checkout? Does that have a significant increase in conversion? Is it negligible? Is there enough data there to really tell you?
From my perspective, it doesn't do anything for us. We're selling a service and not a physical good, so the shipping information doesn't matter. Your billing information doesn't matter. We just need a zip code to get decent rates, and entering that is enough. To me, I think Visa and MasterCard, they're taking it to us on a regular basis. We have small dollar transactions, and it's really expensive with the Durbin Act and everything like that. It hurts us pretty bad. I would love to just go direct to the banks and ACH and cut all the middlemen out. I mean, that's where I want to be in a few years. Just I don't want any buy buttons. I want direct ACH.
Well, maybe the way that manifests is a buy button. It's just a bank-driven buy button as opposed to a network.
Yeah, I like
buy
the
button.
Venmos, the Plaids. I mean, I don't know if Zelle's going to get to the point where we're going to be able to use that or something, but hopefully there's the opportunity to do it.
I second that. I do think that just from our perspective, that enabling the most amount of payment options available is critical. So we don't want your credit card, right? If a wallet's been delivered, we'll leverage it. We've talked to crypto wallets, right? Just in the case that they become popular. So if it were to emerge as an industry standard, it would just be another addition, but it's not much legwork to add it in.
Right. Normally, one of the sort of feedback points there is that there is sort of an increase in conversion rate with a lot of these, right? And so it's interesting. I don't know.
Yeah, conversion for us, I mean, it doesn't matter, right? You parked your car, you have to pay.
Yeah,
You're either paying
fair.
or you're getting a ticket. We're not worried about like you having have one extra step to enter your credit card because it's a $50 fine, or you're going to pay the $1.50,
Right.
and go through the process, or go walk to the meter and have a worse experience, right? So we would love to have a better customer experience with those things, but people are going to make the payment one way or another.
Right.
We're not getting drop off because that PayPal wasn't an option, or these other buy buttons were an option.
So then in the context of payment, is the thing that you're trying to optimize cost? I mean, is that ultimately it for you? Is just driving
I
down?
mean, we're 300,000 transactions under $5. It's bad.
And Tim, what about you?
Yeah, I mean,
that's obviously a significant part of your
Yeah,
cost as well.
We don't absorb those costs, but we do operate on behalf of the merchants that we support. So, I can appreciate the
Yeah, it's their
$5
cost,
cost.
right?
Like,
Right.
we support a lot of coffee shops right now.
So there's a sort of obvious answer to this question of that the banks get interchanged, but I'll ignore that for a second and just say, what keeps the banks from offering a more direct product? Like, why can't you go to your corporate banker and say, hey, let's work out something where at least for your piece of the pie, we do a direct transaction? What's your perspective on that?
I think Chase is trying to do something like that, right? I don't know, just because there's too many options. I think the guys, like I said, there's some of these. Plaid is one example of where they're having you sign into your bank account and then basically giving you ACH information. I think that's in order not to have to work with 50 banks to get it done.
Right.
Someone needs to be the platform that allows that to happen, and I think they're maybe one of them.
I think to that end, though, as well, as from a consumer's perspective, there's the security hurdle, right? And the feeling that if you're plugging your credit card number in, that's one thing, but you're confident that if you call American Express, you'll be refunded for any fraudulent charges, whereas your ACH information feels a little more personal. And if you are not aware of the interchange fees or anything associated to the processing of a card, what's the incentive for you to do it? So I think you got to consider the privacy environment a bit there and how the customer feels.
Frank, do you see any shift in the positioning around that? Do you see more shift to direct debit and other forms of payment?
Not so much in the U.S., but a big portion of our business is in Europe, and not to go off on a tangent with what's going on in Europe, but Europe's kind of leading the world in terms of opening up the banking infrastructure for experiences like that. There's not yet a platform that's emerged to kind of be the point of connectivity for all these different account services that are going to be emerging over the next several years in Europe. But the interesting thing is to be compliant with some of the open banking standards in Europe. If you're a licensed financial institution with an office in Europe, for you to continue to have that license, you have to support the open banking standards, which means if Bank of America has an office in Europe, and I'm pretty sure they do, they've got to be compliant with the open banking standards.
Right.
So I think you're going to see a lot of it, even though it's Europe focused, it's going to work its way back into markets closer to home. And, to the point around, our view of how merchants look at the calculus around whether or not they're going to lean into a payment type like an offering that Chase would come and say, we'll do an on-us transaction. The calculus that the merchant typically goes through is, I'll steal your line, but I'll put a spin on it. We like to say, if there's a way to accept goats as payment, we should figure out a way to enable goats as payment. Merchants want every payment method under the sun. If somebody wants to buy my service, I want to give them a payment method to do it. And so these on-us transactions are going to be one of many payment types. And so the merchants go through the exercise of saying, with all the things I've got going on, do I want to invest the engineering resources to solve this one corridor and still be faced with the other ones, or am I going to bite it off when I can get more kind of wrapped into one? That's a really interesting dynamic in how you try to figure out where these on-us opportunities are. We've also seen other merchants who say, if I can save a BIP in a transaction, I've got the engineering resources to save myself a BIP. And some that are competing on margin, and I'm sure some with low average ticket size of $5, paying 22 cents for Durbin. Man, you're going to lean in really, really hard to try to save a few pennies off of any transaction.
Right. So let's talk about this. So one of the other announcements in the last couple of weeks has been the news of Amazon in offering Amazon Pay as a checkout mechanism. So if you don't know, Amazon has a checkout service that they offer to merchants as another button, right? News / I don't know if it was actually official or not, came out that they were offering those merchants essentially their transaction cost, right? Is something like that is that enough for you guys to where suddenly it's like, oh, well, we should, again, I understand that you're not getting paid by the end consumer, but pretend you were, right? If you were taking those transactions from the end consumer, does Amazon Pay become something purely because of that, where it's like, okay, let's throw that on the checkout and see?
I think it's about a simplification of the rate, right? Especially at the local level. And as soon as you hit that mid-market level and there's some complexity to it, you start doing some calculus, right? But if you're talking about a smaller merchant, the lowest rate is going to win regardless. So if that represents the least amount of money that I'm going to fork over for my $3.99 coffee, they're going to take it. That's why Square has taken over that market in general with their flat rate. It's transparent. You know how much you're paying regardless of the transaction.
Yeah, well, I would argue there's 2 points in that, though, right? Square is successful because of the transparency and the standardization of the fee, but you're going to pay more in a lot of transactions with Square, right, than you would if you were doing. Now, again, smaller merchant, that market, the transparency is more valuable in that case than the sort of truly driving down the cost. But as you guys think about that, again, does that have appeal? If you know that if I throw an Amazon Pay button on my checkout, I'm going to get a better rate, does that become good enough to invest the energy in it?
Oh, for sure. Yeah, I want the best rate possible. It's just, save a few points, and it's worth it.
Yeah.
It's a volume play for us, and the number of transactions keep increasing. If we can get the cost down, it makes it work. So,
Frank, does that calculus change if you're a merchant that is competing with Amazon, right? If I'm a physical goods merchant, if I'm a Target or whoever, does it a completely different calculus now of, oh, wait, now I'm potentially giving them data that cannibalizes me in some way?
I think it does, which is why I think one of the elements of that announcement was the fact that they're making it available to marketplace sellers. And so these are people who have already kind of leaned into the Amazon model, right? They're already viewing Amazon as a platform where they can reach more sellers, and it makes perfect sense. I'd be really interested in, seeing, I can imagine the banks, I used to come from the issuing side, the banks saying, hey, hold on a second, Visa, MasterCard, our partners, you may have negotiated this rate for things being sold on Amazon. Now Amazon's using it to club us over the head and extending it to merchants that we think we have pricing power over. I'll be really interested in seeing how that plays out over time.
Yeah, so the rumor, right, is that Amazon's not really offering those rates. They're just eating the difference, right? But who's to say whether that's true or not? But
Yeah.
because, I don't think they could get away with a contractual standpoint by a third party that rate out. Right?
And there's plenty of services like yours. I mean, you don't compete with Amazon in any element.
Right.
And then there's a segment that have already leaned into Amazon. They're going to be ripe for the picking. That third category that you're pointing out, I don't think they're going to win customers over, and I do think merchants, there's some segment of merchants that are just not going to want to play with Amazon because it's a competitive threat. I think they're going to have plenty of runway, though, with the first two categories.
Yeah.
Ones they don't compete with, and folks who've already chosen to sell on their marketplace.
So as we get close to the end of our time here, I'm going to get some questions from the audience in a second, but I want to ask you one last question. There's a lot of obvious benefits about the sort of move to digital, whether it's experience, it's convenience, it's squeezing out costs in some cases, but what are some of the negatives? Like, what is something that gets lost, right? As we think about, in a retail scenario, you could say there's a human interaction element and maybe it's an upsell ability or something there. But if you think about whether it's parking or it's, a mobile ordering app for food or it's some other business, what do you guys feel like is something that's lost in that shift to digital that either you're solving for or that's still sort of a gap or something out there? Frank, do you want to?
Yeah, I'll start. I'll make it quick because I'd love to hear their view on this. But I think it's a short-term phenomenon, but I think it complicates people's lives greatly, right? Trying to figure out how do I employ these new ways of doing business. We like to think of Chip, the guy that runs the 2-location pizza store, right? He's got a family he wants to get home to at night. And if you go into one of his stores, you see that he's got every possible sticker on his window, from Yelp to OpenTable to Visa, MasterCard. He's getting called, multiple times a day from somebody wanting him to sell something new. Poor Chip, he's just overwhelmed with all this. It's like an explosion of innovation. I think that's a temporary downside. I think the noise will settle down over time as the winners rise to the top. But I do think that level of complexity is often missed by a lot of us trying to drive these innovations into the market. Are we really simplifying the lives of the people we're trying to serve, whether or not that's the merchant or the consumer? A lot of new muscle memory being developed with these digital platforms.
Yeah, I would say we probably, in the parking side, we definitely introduce more complexity into the process, right? So versus going to look at each meter when you're walking down the street as an enforcement officer, right now they have to have a mobile device where they can see mobile payments and who's paid. In the long term, I think we can try to make it simpler with LPR vehicles running down the street, seeing who's paid and not. But in the short term, we've definitely made it harder for the city to enforce their streets. The complexities of reconciling multiple systems now. We aren't fully integrated with the meter system because they're not capable of it yet. So now we have 2 disparate systems running revenue through. It's 2 different revenue systems that need to be reconciled. So there's definitely complexities that we've introduced with it. But that's why we're trying to become that platform that maybe the meter systems have to connect to. And so we'll try to, though we introduced a lot of complexity, we're hoping to try to remove it as much as we hurt the system.
Yeah, I'd second what both Frank and Brad said, is that it introduces net new workflow to both the merchant and the consumer. I think it's a complexity that's near term. It's getting them to evolve in that fashion, understand that it doesn't represent a negative change to their business, and the intention is to drive new business and new revenue. But getting them over that hurdle is as easy as picking up a coffee in the right place as a customer, right? And all the work that Starbucks has done to train us is great. But what happens when you introduce a net new retail experience that isn't necessarily ubiquitous and understood by all? So getting people over those hurdles and training them, and that's change management at different levels depending on the merchant you're working with. It's far easier to train a barista at a local coffee shop than it is at Caribou, right? When you're talking about rolling out a massive workflow adjustment. So I think it's just a matter of
Is there some truth to the statement that you guys are positioned to do that because you can fail fast and iterate and that sort of thing, whereas incumbents, part of the reason they're incumbents is because they do the things the way they've always done the things, right? That's what makes them the incumbent to some degree. I would imagine that the ability to sort of come at it with a fresh idea, fresh perspective, you guys try something, it doesn't work, okay, you go try the next thing, right? That's not going to destroy your business, or if it does, then you go start the next business, right? The risk of failure is a lot lower to some degree. Would you guys agree with that, or maybe not feeling that today? But does that resonate at all?
I'd say as long as you're continuing to add enough value to outweigh any sort of negative workflow, right? So if the customer had a bad experience where maybe the pizza or their coffee wasn't ready when they got there, but they know they're using a new product and they saved $5 on it that day, it's a lot easier for them to absorb that negative experience knowing that the value outweighed it.
Right.
Yeah, I would, that concept of regret in risk management is pretty powerful. Why does a guy who's, got a master's level Ivy League education spend $1 on a Mega Millions jackpot? I have no chance of winning. My regret is $1. What's your downside? It's $1. But I think that's a fairly powerful observation around incumbents versus innovators. Introducing something even marginally different than what you're doing at scale billions of times a month or a year, the downside of screwing that up and introducing something that echoes into your core processing for an incumbent, really prevents you from doing a lot of innovative stuff.
I'll open it up. Any questions? You guys have not been a very vocal crowd today. Any? All right, well, then they'll be happy with me because I ended 3 minutes early. So thank you, guys. Thanks for the perspective. Great conversation. I think, Dan, are you coming up?